Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I provide mediation and valuation services based in St. Louis, Missouri. Today, we will discuss M&A sports franchise valuations with Edwin Draughan. Edwin is a sports franchise valuation expert based in Los Angeles, California, and has been a member of Park Lane since 2017. Park Lane is a boutique sports-focused investment bank founded in 2005. Edwin's primary responsibility at Park Lane is to lead the firm's efforts with sports franchise valuations and due diligence, which also includes the client relations, market awareness, deal sourcing, and execution. He also plays an integral role in the firm's sports franchise M&A advisory, early stage capital raising, and traditional real estate divisions. In all valuation, either business or having to do with specifically sports teams, we are still actively in a pandemic. And so from that respect, and it has affected valuations and all of these financial analyses pretty extensively. But what do you see as what we could, see going forward, selling trends or even valuation issues that you see with sports and this continuing pandemic? Because it does affect viewership. It does affect for a certain period of time, people couldn't even go into these sports arenas. Did that even matter at this point?
I think from that perspective, it didn't have that great an impact on valuations in terms of ultimately losing part of a season to fans. These are assets that are historically just in high demand. So people will get them when they can. An area in which I think this may have affected kind of the M&A market for sports teams is the fact that I mentioned earlier that majority of sports team owners did not create their wealth owning sports teams. They created in other industries, whether that's hospitality, tech, media, real estate. And during the pandemic, some of those industries struggled. So for a sports team owner that owns a team that isn't their primary focus, they may have to liquidate a portion or all of that sports team in order to compensate for losses in other areas. And this, theoretically could mean that there's a higher supply of teams on the market. We have seen quite a few teams trade hands over the past year and a half. I can't say whether that's directly an impact of COVID, but we have seen an increase in teams that are going on the market. Now, simple supply demand economics, higher supply should theoretically push down valuations. But the valuations that we've seen teams sell for have been pretty consistent with what we've seen historically. So again, I think that's just a testament to the high demand of sports teams, that regardless if there's more teams on the market, there's enough people that are waiting to acquire them to keep valuations and prices pretty high.